Oh my God, the Bitcoin price is dumping. Guys, the Bitcoin price is not dumping. We're still just within the range. And I'm going to tell you something, things could get a lot uglier a lot quicker. So I'm going to give you a very quick market update. It's not going to be very hard, okay? I'm going to give you the exact same update that I gave you before that you chose not to listen to, but this time you're going to listen. All right, look how simple. This video is going to be so short. It doesn't need to be long. Look at how simple, okay? 4-hour structure. I told you guys, I made a video. I said, I'm like, guys, there's no point in getting macro bullish until your 4-hour structure flips bullish. I made a video. I even put a horizontal line because I'm so nice. I put a horizontal line and I said 50 or 64.5. We need to break 64.5 in order for us to get bullish. What did we get? We didn't get a break of 64.5. And by the way, if you are in my VIP Discord, I gave this short setup in advance to my VIP members, and the target was at the low, and the target has been acquired. So target neutralized. And look, there is no need to get bullish. There is zero need. Don't listen to the noise. Don't listen to Twitter. Don't listen to the other YouTubers that are saying 100K, 150K, 200K. There is no need to get macro bullish until now. The new 4-hour high is broken, which was the high from a couple days ago up at 63.8. We'll call it 64K. Until you see Bitcoin at 64K, yes, 64K. How much of a pump is that? That is, give or take, a 12% pump. Until you see Bitcoin break, I'm going to say now at this point, a 12-hour candle above $64,000, you have absolutely zero reason to be talking about coming back to the highs of the range. Absolutely zero. And you know what's going to happen if and when that happens? You're likely going to get somewhat of a rejection, potentially off of, let's just say, 65, 66K. You'll get a pullback into an order block that we form on this, maybe your golden pocket for you retail traders, and then we're going to send it up. And then you can long it, gig along it. But until the 4-hour structure flips bullish, there is no need to be focusing on longs, especially if you're not a scalper, okay? If you know what you're doing and you're advanced, yeah, you could scalp up here to certain higher prices, fine. But if you don't know what you're doing, you don't understand the macro of it, there is absolutely zero need to be longing and to be super bullish, okay? I keep it real with you. I do not lie to you, and that is very evident here. On top of that, I actually went live. The past couple live streams that I did were live scalping sessions during the New York session. And I actually went live with you guys on my public YouTube live, explaining my thought process rather, why I went in, where my target was back here. Okay, so I'm currently in two short positions. Both short positions were given to my VIP members. I'm currently in two short positions. One is from up here, but I got in actually a little bit late. It's probably from around here. And then the second one is from here, okay? And this one I've been shorting, taking profit, shorting, taking profit, shorting, taking profit, shorting, taking profit the entire way down. And it's because it's very easy once you can understand order flow objective, okay? Now, I made a video for my VIP members indicating that I think it's very unlikely that we're going to stop in between this point and this point. I absolutely think that we are going to make our way down to 56.4. At this point, this is a very aggressive move. We tried to break bullish, didn't work out, boom, failed bearish, and now we just broke structure again to the downside. So I'm going to tell you the same thing that I said in the beginning of the video, and I'm going to tell you the same thing that I said in the last video that I sent, which is there is absolutely zero reason, zero, to get bullish until your 4-hour time frame flips bullish. I also mentioned on the 12-hour time frame, guys. I shorted yesterday. I giga shorted. I'm in a giga short right now, okay? When it comes to market cipher, I say this all the time, man. Look, there is few people that know this indicator more than me, okay? And there are people that are very good at this indicator, and to be honest, the whole market cipher team are very well versed with market cipher. But I have created rules like the thicker the money flow, the more chances of divergences, like cheat sheet entries, to make it simple, okay? And I posted on Instagram a video saying, like, look, that can mean the 12-hour time frame, guys, you had no reason to long. If structure doesn't flip bullishly, okay? If you're remember, we were watching for this 4-hour flip. If structure does not flip bullishly, then you have no reason to long. And so my thought process that I was like going through on the 12-hour time frame here was, even if we did flip structure bullishly at some point, this wave, okay, let's just say it continued upwards. At some point, this wave is going to give you another white dot, a red dot, whatever. And then eventually you're going to get a white dot that's below the zero line. If you know anything about market cipher, you understand that there are many rather oscillators within one, okay, on market cipher. Now, the speed in which your oscillators like your different indicators oscillate in are different. Your money flow is your holy grail, but it also oscillates the slowest, right? Your VWAP oscillates this fast, your momentum waves oscillate that fast, your money flow oscillates this fast. So my whole point to saying this is even if we broke structure here, we would have gotten some retest on some time frame at some point. And by that time, your momentum waves would have potentially been higher than you would have eventually had a white dot below the zero line while money flow was slowly creeping up. Because remember the speed of your oscillations. So there was absolutely zero opportunity to long. Okay. There was zero opportunity. Anybody that was long was, smoking the hopium and thinking the up only thing and the Twitter thing. And not only that, man, but the weekly time frame, guys, we got bearish divergences across markets. Okay, across cycles. So in general, you should be favoring shorts. In general, we've been up only. I'm not saying that we're going to zero, but the clues were there. Okay, the clues were there. And if you're a subscriber of the channel, then you should have known that because I always talk about the thicker the money flow, the more chance of divergences. That's the number one rule when it comes to market cipher. And if you are subbed and you haven't hit the notification bell yet, then you should probably do that because like I said, I went live. I explained why I shorted on live, and now we're here. Okay, so instead of trying to catch every dip and buy every knife, I said that the wrong way. But instead of trying to do that every single time, like Twitter's telling you to do, just got to remember the thicker the money flow, the more chances of divergences. And you would have known that had you have hit the subscribe button and the notification bell. So I do want to talk about a couple other things. Yes, theoretically, it's possible that we get a retracement here. Yes, theoretically, it's possible that, this is the low. I personally think that it doesn't really make sense, in my opinion, for them to not come and take this low. Why am I saying that? Although we do have very slight bullish CVD, which I'm very bullish. I'm a little bit lazy to go get for you, so you're going to have to take my word on it. We do have slightly bullish CVD. That CVD could be leading. But let's just think about it in a market maker perspective. Okay, what do we have here? Well, we came up to the high once, twice, 3, 4, 5 times at the very least, not including these little mini wicks that, tried every time, right? And you have to think like a market maker. In order for price to go up, price has to, or someone, in order for somebody to buy, somebody has to sell. In order for somebody to sell, somebody has to buy. Okay. Now, when we made our rise here, that is market makers potentially, like look at these vector candles. That is them market makers are limit shorting on the way up. Okay. Which means retail, FOMO, because oh my God, price is pumping. I'm going to miss it. We're going to 100K. Twitter's saying 100K, whatever. You're market longing. Okay. Now you have to think if they were going to be this far away from the all time high, okay, less than 3% away from the all time high, why would they not come and take that liquidity? Why? Because they know that the people that are longing here are likely going to take profit at 74K. Now, don't get me wrong, they could have easily SFP'd the high and trapped more traders at the high, but nonetheless, they clearly didn't want to give these positions, these people, their money, okay? Because some people, I imagine, would have taken profits after stalling in this range for super long, whereas here they didn't take profit, okay? So understanding that, you got to think, why would the market maker send the price back down, right? Markets are going to move for 3 reasons: either to generate liquidity, attack liquidity, or what was the last one? Why am I tweaking? Whatever. I don't even remember it right now. It doesn't matter. Generate liquidity, attack liquidity. Oh, to rebalance and imbalance. Okay. So the imbalances, the vector candles, they already came back and rebalanced. So that we already know. Option 2 would have been to sweep this liquidity, which we did, right? There was an opportunity here for them to flip bullish, but they hadn't flipped bullish. They had the chance to, and they didn't. They decided to roll over again. Why did they move the market? To sweep liquidity. There's no more liquidity here. This liquidity was already swept. So where's the next liquidity? Is this low here? That's why I'm saying it's very unlikely that the low is in just yet. And I'm going to tell you this. In the event that price drops a lot further, which it very well may. My hair looks like shit. I'm getting a haircut in like half an hour, which it very well may. I imagine many people have orders in this range, okay? The people are looking at this. Retail is looking at this. They're saying, oh, yeah, this is support. I'm going to set some orders here, da-da-da-da. But I'm going to build a case as to why, if you are one of the people that have orders here, you might want to reconsider. Now, don't get me wrong. We do have good confluence here, and we can bounce from here. I'm not saying we're not going to bounce from here, but for our more macro analysis, I want to bring your attention to one very important thing that nobody else that I've seen is talking about, and you're going to be very happy you clicked on this video, okay? The very important thing that we're going to be talking about here is this liquidity. When we came down here, we actually put almost, not exact lows, but semi-equal lows, okay? Which means there is liquidity that resides here. But I'm going to show you the money right now, okay? If we come on the daily time frame, watch and learn, my friends. If we come on the daily time frame, you have a daily order block just beneath this range, just beneath it. So while many people, excuse me, while many people, I imagine, are setting limit orders all here and they're putting their stop here, these people are going to get wrecked because there's a daily order block that is just beneath here that had inducement, and we have a level of liquidity that we can come and sweep. So here's what I'm going to say. If Bitcoin decides to, in my opinion, rightfully so, absolutely roll over and die, you got to be aware of this area. You can't just long here, putting your stop beneath here because you have this liquidity. And what do we know about Bitcoin? When it rains, it pours. And what do we know about just markets in general, right? Oh, the inflows, it can't go up. Or it can't go down. The inflows, the inflows. What happens when the stock market starts crashing? What happens? What happens when the people have financial advisors? What do? They get on the phone and they start saying, "Oh, I want to sell. I want to sell." What does your advisor tell you? No, it's not a good idea to sell. You don't sell when it's down, you sell when it's up. And they're like, "No, no, I don't care. I want to sell," because this is how people are. This is emotions. This is how people have been since the dawn of time. Okay. And you need to understand that when it rains, it pours. And inflows, not inflows, supply shock, supply shock, not supply shock. Price is going to go down if the market makers want to send the price down. So I want to bring your attention to this level. Don't put your, I mean, look, you might get something like this where you come down, you bounce off here, you range a little bit, and then you come down and sweep that, right? And then we'll have to analyze at the time. But you also might get a massive wick like this, okay? And we do have quite a lot of support around 51.7K, basically the middle of this order block. But it's not uncommon that you will find your candlestick to look like this, where you wick the important level, and then you come back up, and then you like hang around where that support is. So I would not be surprised if this comes into fruition. I'm going to take a screenshot of this and I'm going to show it if it happens. But yeah, that's my very quick update. I mean, it wasn't as quick as I wanted to. I went a little bit more in depth than I anticipated on. But in general, I mean, guys, there's no point if you're not a scalper. There's no point in longing. There's literally no point in longing until now we close above, let's say 64K. There's no point, right? You're in a downtrend. Don't fight it. Just like you shouldn't have fought it on the way up. Don't fight it on the way up. I mean, on the way down. You know, when you have a fast move is the false move. We can easily come down and recover these vector candles. And yeah, I mean, it's quite simple. Anyways, guys, if you're looking to purchase Market Cipher, which is the only oscillator, in my opinion, that you need, the link is in the description down below. Shouts out to the sponsor of the channel, Market Cipher. If you are looking to trade on exchanges, I trade on Mexi. I trade on, and now because Mexi is KYC, which is kind of gay, but whatever, I trade on KSEX, which is kind of the replacement for Mexi. It's very similar. Same UI, and I actually think low-key it's the same company. But anyways, I trade on KSEX, Mexi, and I trade on Blowfin for the non-KYC people. In addition to that, I want to just mention one last thing. A lot of people are hitting me up about CryptoFace's breakout, and I am starting to test it. My next positions are going to be taken on breakout, so I'll have an opinion on breakout for you when it's the next, when I'll have an opinion soon. Okay. So if you like the content, hit the like button. If you loved it, hit the subscribe button with the notification bell so you don't miss my live shorts that I took while I'm in profit. I'm going to post right now on the screen my little screenshot thingy. And what was the last thing that I had to say? I had one more thing that I had to say. Oh, yeah. I got a Market Cipher trick for you guys. I got a Market Cipher trick. It's not that hard. It seems very simple, but it seems like a lot of you guys still don't understand it. So if you want to see this little Market Cipher trick and you made it to the end of the video, first of all, thank you for making it to the end of the video. If you want to know this little trick, let me know in the comments down below because it's quite simple and it'll really help you. It'll really, really help you in the long run. If you want to know this little secret that I got up my sleeve with Market Cipher, let me know in the comments. Guys, thank you very much for watching till the end of the video. Happy 4th of July to my USA peeps, and I'll catch you guys in the next one. See you later.